What is up, guys? Taiki here. Welcome to the State of DeFi report for April. So if you like the content, please like and subscribe. Leave a comment in the comment section below. Link to the premium Discord description below as well. So let's get right into it. So this is going to be the agenda of the video. Let's talk about the Shapella upgrade and the Echo Bubble and talk about the May seasonality and reasons to start being a little bit more cautious. Then I'll talk about Trader Joe, the metrics behind Trader Joe, how it's like really killing it, and talk about future narratives that might pop off in the DeFi markets, as well as my general view on the altcoin. So not as financial advice, let's talk about the Shapella upgrade. Before the actual hard fork, I think, if you asked around, probably like 7 out of 10 people probably would have told you that this was going to be a bearish event, right? Or like a neutral to bearish event. But obviously, like as the upgrade happened, and even before the upgrade, like we were like pumping into Shapella, and even after Shapella, like we just keep putting in these green candles. And it's been a while since I've seen a 3 handle on Bitcoin and a 2 handle on Ethereum, like above 30K, above 2K, and it's like, wow, like it's been a while since I felt this way. Like even as a crypto bull, I'm still in this phase of disbelief. And also like these LSD tokens are also going crazy. So let's think about why this happened, because why are people buying into this, right? It's like, shouldn't this be a bearish event? Like, aren't these ETH whales gonna withdraw their ETH? They're gonna dump it on my face. Why are we pumping into this? And I think this is a lesson that we constantly learn in crypto, and it's the fact that I have no idea what it is about the crypto markets and people in crypto, but people just get way too bearish or way too bullish ahead of certain events that everyone knows about. And I've talked about how everything in crypto that is perceived as bullish is almost always sell the news, because if the entire market knows about a particular event and can position themselves ahead of time, then anyone that wanted to buy a particular token would have already bought. So when the actual event actually happens, then there's no one left to buy. So that's why it's always sell the news. And then I raise this question of well, if it's pretty much consensus that Shanghai is going to be a bearish event, wouldn't that be a sell the rumor buy the news event, where anyone that wanted to sell probably would have sold before the event, because I'm going to sell Ether because people are going to dump on me, time to just de-risk ahead of the event. And also you have to think about this element where there's a bunch of people that don't really have that much crypto exposure. They were looking to buy any dip that comes from Shanghai, right? This hard fork, and they were asking themselves, I don't have that much crypto exposure, but I'm gonna wait until April or May. So if we see a dip from Shapella, from Shanghai, I'm gonna buy that dip. So if there is no dip, then what are these people gonna do? And maybe that's what we're seeing now. Maybe it's a short squeeze. To be honest, I have no idea what's happening. Anyone that tells you they know what's happening has no idea, or they're lying to you, because I honestly have no idea. My mindset is 2022, super bearish, super sad. So much PTSD. 2023, it's gonna be viewed as an accumulation year, recovery year. So just buy things you like and just hold on to it, right? Earn yield while you can. That's kind of my mindset. I'm not really trying to complicate things too much. It's if you're if you're bullish crypto, are we really in this game of selling Ether at 2K to buy back at 1700? What if it doesn't get there? It's I'm not smart enough for that. Let's just have a general strategy and stick to it. And I think with this upgrade, it just shows us that positioning, right, how the market positions ahead of an event is way more important than whatever catalyst is bullish or bearish. It's if you think about the solidly, right, the phantom season with solidly, it's I was bearish solidly, but everyone's hyping it up, and then when solidly actually launches, everything goes down. And that was the case for Arbitrum too. It's everyone anticipates Arbitrum alt season post airdrop. Everyone buys these altcoins, but when the actual airdrop happens, it's am I really gonna take my Arbitrum token, dump it for altcoins? Probably not. And we kind of see the sell the news happen over and over again. But I guess for consensus bearish events, it's gonna be sell the news buy the rumor type of events. I wrote the squiggle in my last video. I thought Shanghai probably gonna be a good place for ETHBTC to bottom. I will say that ETH withdrawals being live, it for sure will introduce some incremental sell pressure, but you can't always just think about the supply side. You also have to think about the demand side, and even Bitcoin's being sold by the government, Mt. Gox and whatnot. But people there are just way more buyers than whatever incremental sellers are left in the markets. And as it goes, when I look at Bitcoin, I'm like an ETHBTC bull, right? I think that's pretty clear, right? I literally have a DeFi channel, but I started out as a Bitcoin Maxi, and I do think that it's important to always, not get too caught up in, just pure Ether, pure DeFi, pure NFT mindset. I think, Bitcoin is leading us out of this bear market, and I think the narrative around digital gold is very, very important. So on the left-hand side here, you see the chart for gold, the weekly chart in 2008, 2009, in the post-financial crisis. And on the right-hand side here, you see gold, the weekly chart, I guess, for the past couple of years. After like the whole Silicon Valley Bank fallout, gold is really pushing for all-time highs. And the price action here, it really looks similar to what we're seeing here, right? And like the question you have to ask yourself is, if gold hits like 2,200, right, like hits all-time highs, what's that going to do to the price of Bitcoin? I mean, it's just a narrative, right? Like, there's no reason for Bitcoin to trade in line with gold. But I do think that as Bitcoin, enters the zeitgeist, it's in the mindshare for, millions of people. If people are looking, or, if like the older people, right, if the boomers are shilling gold to like their clients, then I'm sure that like the younger audience, they're going to say, like, I don't want to buy gold. Like, I'll just like buy Bitcoin or something. And then like that money should slowly trickle down into either DeFi, NFT, altcoins. And I guess like that's why we're in this space, right? Like, we did not endure a brutal 2022 bear market just to, get fudded out, because there's been so many FUD events, right? Like USDC, Silicon Valley Bank, the Wells notice for Lido, Coinbase, Kraken being sued, Binance being sued, like whatever, like, there's like so many reasons for the markets to go down, but the markets have continued to climb a wall of worry. And I think how price reacts to news is how the markets like to show their hand. And I think we are in the beginning of an uptrend. I'm not saying up only, and I'll talk about like my reasons to be cautious around these levels. But hey, like, just don't lose sight of the big picture. And, people have been calling for Bitcoin dominance, but, I don't really see that much upside for Bitcoin dominance above 55%. Like, I have a fat position of Try Crypto, and I think Try Crypto, right, is an LP token, right? 33% Bitcoin, 30% Ether, 33% stablecoins. I think it's like an ETH Maxi's way of hedging against Bitcoin dominance. But, if Bitcoin just continues to, I guess, dominate the entire markets, around like this, the red square, I'm probably gonna just like pull out of Try Crypto, and like it just be like, super heavy Ether, and probably ride that for like the next couple of years, to be honest. Now let's talk about the echo bubble thesis, right, and the May seasonality. And this is like my reasons for being relatively cautious right now, despite, I mean, like I'm like a bull, but like I'm still in the disbelief phase. And this echo bubble is this concept of, crypto follows 4-year cycles with the Bitcoin halving, and, following the 2018 bear market in 2019, we literally went up only for 6 months. Pretty crazy run before just like withering away for the latter half of the year. And now people are saying, hey, like, same thing, right? 4-year cycle, 2019, 2023, let's mirror this thing, let's pump into June, and then let's sell into May, sell into June, and go away. There's like no fundamental reason for why this should happen, but it is happening. Maybe because crypto is super reflexive, and if people believe that certain things will happen, it will just naturally manifest itself. It's a very reflexive asset class. It's really hard to value crypto tokens, so it's more dependent on like how people are feeling it. Like, it's all about the vibes. If I were to be completely honest. It's kind of freaky, right? It's kind of freaky. But let's see, like will this repeat? I had mentioned this 2 months ago that, hey, like I think this can happen, but if it does happen and people start, like really pumping it, I do think it makes sense to start thinking about selling in April and May. The concept is, if people expect it to pump into June, then people will think about selling in June. But like, I guess like the smarter people, it's like, maybe not smarter money, but like, if you think about like the risk reward, it's like, if we're pumping into May, like why not sell into May? But if everyone thinks that, then like why not sell into April, and like just like have a general de-risking strategy, right? That's kind of the concept. I don't really believe in seasonality stuff, but like the data doesn't lie. And I think as crypto matures and that as an asset class, it becomes more traded by institutions, larger players. I do think that, legacy correlation is, relatively important just to be aware of. And there's this concept of selling May and go away, where, they're like generally like, from the period from May to October, on average over the past couple of decades, the average return is like roughly 2% for the S&P, whereas for November to April, it's roughly 7%. So, people generally just, I have like no idea, like maybe people go on like summer vacations, and it's like more pronounced in the Dow Jones Industrial Average. But there's like this consensus seasonality thing of, just from May to October, just chill out, maybe raise cash, maybe like buy treasuries, go for those yields. And it's just something to be aware of, because I took the liberty of looking at the Bitcoin price, and in the red box, it highlights every single, I guess like the price action of Bitcoin for the month of May. And I guess like what people are looking at is like, okay, like if we're gonna see Neko bubble, like maybe we pump into May, right? But if you look into the other years, like that's not really like how it works. And I think the adage of sell in May, go away actually works in crypto, even though like there's like no real fundamental reason for why this should happen. Of course, in 2017 we were like up only, but I mean 2017, like I don't think we're in the 2017 market conditions. So let's look at the other months, right? Or other years. In 2018, you pumped it into May, right, in the bear market, and just like retraced it all, like like really brutal price action. And then 2019, right, just like up only, and in 2020, which I think is like where maybe it's like a good analogy, right, or where we're at is we had the COVID crash, right, in like February, March, we went up only until May, and then it was like the Bitcoin halving in 2020 was sort of a self-induced event. We basically went sideways for a couple of months before like really going parabolic. And in 2021, after this parabolic rally, we had the Chinese Bitcoin miner FUD, like in Tesla selling Bitcoin, all that. And like this was like when I woke up and my portfolio was down, down 30%. And I was like, oh my God, like did I get liquidated on Aave, right? That's literally like how I was feeling at the time. I'm sure some of you can relate if you were in the markets back then. And then in 2022, that was basically when Luna collapsed, and then in June like 3AC collapsed. And that kind of like led to the selling crescendo. And I do think that we've bottomed in November when FTX happened, and there were like no incremental sellers ahead after FTX. And just looking at this, like maybe it makes sense, like de-risk in starting in May, right? But like when I say de-risk, I'm not saying like, hey, just go 100% cash, like go short. I'm just saying, hey, like if you own a bunch of altcoins, like maybe like favor the majors, favor LP tokens, maybe think about hedging, maybe think about just raising cash, and don't get too euphoric, right? Like because if you think about like the higher price goes, the risk reward gets a little bit worse. Of course, over like a 5-year time horizon, like 30k Bitcoin, 2k ETH, like pretty good entries. But like we're not really trying, like or if you're watching this video, you sort of care about short-term price action. And to be honest, like I don't really expect like a crazy dump. Maybe we see some correction. I think the most likely outcome is something like in 2020, where after a face melting rally, after like a crazy sell-off, maybe we just consolidate for a few months before resuming the uptrend in the latter half of 2023, early 2024, especially with the Bitcoin halving. That's kind of like my most likely outcome. But hey, just let's think about de-risking strategies, right? So let's think about like, I guess like ways to reduce volatility in your portfolio, especially because on-chain fundamentals haven't looked that great for a while. Like even since like the Luna collapse, like so the red line is the stablecoin market cap, and it just like really hasn't gone up. And especially with the whole USDC-D peg, it's like maybe people feel less confident about the on-chain markets. But crypto price is still going up as like despite this happening. So maybe it's literally people not buying things on chain, but hey, just depositing money, right, fiat to a centralized exchange and buying coins on these centralized exchanges. So maybe it's reasonable to expect coins listed on centralized exchanges to outperform like things that are purely on chain. But hey, like over the next 6 months, you're gonna make way more money buying things on chain than things off chain. Like on average, of course. And in terms of like retail activity, maybe this isn't like the best indicator because I only make videos like once a month now, not because I'm lazy or something, but these videos take a long time to make, and I don't want to make more videos for the sake of making these videos. And every time I upload a video, I lose subscribers, and it doesn't seem like that many people are interested in DeFi. And like let's be real, like it's really hard for DeFi to compete with like 1-year treasuries when they're yielding like 4.5%, 5%. It's totally reasonable. And even like YouTube, right? It's like you only lost 550 subscribers in the past 90 days. You're doing a great job, right? Like it's giving me this green arrow, or it's giving me a thumbs up sign. And I mean, at some point this trend has to shift, right? At some point people have to stop unsubscribing. I mean, maybe, right? Like who knows? Like maybe like my videos aren't that great, but like at some point, like higher prices should lead to more interest. But like, DeFi itself still in this relative bear market, I guess. Of course, we're seeing like certain sectors do really well, but on average, I think that on-chain altcoins have been suffering for quite some time now. And unless this trend shifts, unless stablecoins come back online, I think it's reasonable to be cautious. But of course, right, like maybe the bull case is, prices are going up despite people not being interested. At some point, people are going to become interested. They're going to start coming back, and then anyone that's positioned right now, they're going to reap the benefits. So there's like many different ways to slice the pie. But I also can like feel myself like looking for reasons to sell. I'm not like that close to popcorn curvy, but we had like this good banter where it's like we all feel this 2022 PTSD. It's like, do we deserve higher prices? It feels surreal that prices are going up. Like like how can in this macro environment, like how can this happen, right? Like I listen to so many macro podcasts. It's like how can how can they allow this to happen? And I'm like looking for reasons to sell. It's like the whole selling may go away thing. It's like something that I like looked into, and I'm like, yeah, like maybe I should sell it into May, right? Like, there's like no fundamental reason for why I should do it, but I just feel like this PTSD at the back of my mind saying, hey, like, Taiki, like, shit, sell, right? It's like, hey, like, like, we're bound to go down. But, I think throwing away the bear market PTSD, I think you have to view this year as a recovery, accumulation year. Look at the big picture, right? It's like, did we really endure 2022 just to like, sell Bitcoin at 30K? Probably not. I'm not a trader. I'm not good enough to trade. I'm not smart enough for that. So for me, I'm just like, hey, let's find coins I like and hold on to them, right? Don't overtrade. And if I want to de-risk, maybe I prioritize LP tokens and I think about hedging strategies, because I've maintained for quite some time now that I do think that, hey, like, I said this back in December, right? I think LP tokens like Crypto and GOP, they're going to outperform 1-year treasuries. And then I guess like the mindset is like, hey, like, why would anyone buy crypto when people can earn 4 to 5% clipping 1-year treasuries? Well, like, like maybe, right? Like maybe, right? That's a bear case for DeFi. But no, crypto I think is in a secular bull market, and I do think it pays more to be bullish than bearish. And I do think that try crypto, GLP is like my way of looking at the crypto store value. Of course, you can view Bitcoin and Ether as store value, but like from like a risk management perspective, like I don't feel like uncomfortable holding like the majority of my portfolio into these LP tokens. Like once a week I look at the yield and I'm like, oh, like like some guys, like they get off on porn, right? Like I just look at my yields on a weekly basis and I'm like, oh yeah, like this really gets me going. Arbitrum on Convex pays 23%, 33% Tether, 33% Bitcoin, 33% Ether. It's a good way because it like automatically rebalances. So if Bitcoin goes up, then the pool will through like I guess in permanent loss, it's gonna sell some Bitcoin into Ether, stablecoins, etc. And it's like a it's like a good way to like rebalance your portfolio, right? Like you just like pile money into Try Crypto and it's gonna auto manage it for you. You're gonna earn yield, swap fees, etc. And then GLP, pays 20% consistently. There's always FUD, right? There's like, there's like Taiki haters saying, hey, like, you're going to go to zero. But hey, like in GLP, I've held GLP and GMX for over a year now. And hey, like it's done so well, right? It gave me the Arbitrum token airdrop, gives me capital appreciation. It's great. I will say that GMX Synthetics, they're going to come soon. And I was looking at the documentation, and it's going to allow for more assets to be listed. So, for example, they can list things like Solana, because right now GLP can't list these assets. And then I was like, okay, like how is this going to work? Like, how is this going to tie into GLP? And I was asking one of the team members, and it's like, hey, like is GLP still going to be around, or is it going to be like separate, etc.? And he mentioned that GLP is not going to be integrated into V2, and V2 will have isolated pools for each pair. So it's going to be similar to, I guess, Uniswap, where if you want to trade Bitcoin, you go through the Bitcoin pool, right? Which are pretty obvious. And I was like, wait, like, but like one of the beauties of GMX, I guess, is GLP, because GLP definitely has product market fit. And what did that fragment liquidity? Yes, and he acknowledges that, or she, right? He or they, she, but LPs will also be taking on less risk. And it seems like GLP and these isolated pools will run simultaneously over some time, but at some point GLP is probably going to be sunset, which kind of makes me sad. But who knows? Like maybe like the team knows. The team definitely knows better than me, and maybe like the ETHBTC pool is going to yield like 40% like a year from now, and it's going to be like de facto way to, I guess, LP on chain. So no, still bullish GMX, still bullish GLP, but I guess like the thing is, if you have escrow GMX, maybe start vesting them, right? Because I have no idea what's going to happen if they do decide to get rid of GLP. It's probably not going to happen like anytime soon. But hey, just start thinking about this if you care. So I guess like, you know, if you want to be risk on while still like thinking about like downside risk, I think LP tokens, right? You have the stablecoin volatility reduction. I guess like, you know, it stabilizes your portfolio to some extent. Of course, if the markets pump, then you underperform either. But hey, like that's the trade-off you take, right? Or you make, right? And then I guess for hedging strategies, I've been talking about this for some time now, and I think it's starting to manifest itself. And I guess like I'm not like really bullish on like the avalanche ETH ratio. And you know, if I do decide to take off my Bitcoin hedge and like, you know, I go full into Ether and whatnot, of course that's gonna increase the volatility of my portfolio. But what I can do is I can short AVAX against my collateral, so that hey, like I get to protect my downside but also cap my upside. So like my strategy, which I've been doing since last year, you know, on and off, is, you know, something as collateral, borrow AVAX by GOP, and I think AVAX can reasonably pump into the Avalanche Summit happening in 2 to 3 weeks. And I talk about this hedge zone, right, roughly $20 to $50. I mean, I don't think it's gonna get much higher unless we enter like a full-blown bull. But hey, like in that case, like even if I'm short AVAX, I'm gonna be totally okay, because like the rest of my portfolio will probably be doing much better. And this is a AVAX ETH ratio. Nothing against the AVAX team. My friend works there. You know, I respect anyone that works at Ava Labs, and I respect builders in general. But the token itself, it seems like it's bleeding, and like I don't feel like, you know, I feel comfortable like, you know, longing Ether, shorting AVAX against it, and then just like doing various yield strategies there. Yeah, so like the idea isn't like just to be like full on short, but the idea I'm trying to push is, hey, like just buy coins you like, and if you want to protect downside, you can like short something like AVAX if you are bearish to AVAX ETH ratio. Yes, you cap your upside, because, you know, if Bitcoin was 40K, maybe Avalanche at $30, and like, you know, you lose money on the hedge. But I guess like, you know, if you're long in general, then like whatever money you lose on the hedge will be made up for, like more than made up for, by whatever upside left in the crypto markets. And there's this Avalanche Summit happening in May 3rd, and I'm probably gonna, I mean, if AVAX pumps into this, I'm probably gonna start scaling into these shorts, because in 2022, there was a summit in late March, and we pumped into the event before, I guess, like really collapsing. I'm not expecting the same thing to happen. I expect AVAX to just be ranging for the next year or so, and I'm like happy to just collect the yield while I'm at it. One thing that's concerning is that on Avalanche, the Aave supply cap, or the borrow cap for AVAX, has been hit, so I can't really borrow AVAX. So I might have to figure something else out, because, you know, this really makes me sad. But there's this other money market, if you remember, right, Benki, you can borrow AVAX here. But you know, like in a bear market, it's really hard for me to deploy capital into like new projects, right? Like in size, I just like get like PTSD. Even like Euler Finance, the money market with like 12 audits, would like raise VC capital. They recently got exploited. They got their money back, but like it's not like a good time for like anyone that like lost money temporarily. So just an idea, maybe it's not viable due to like if you're like a risk averse person with the AVAX borrow caps, but hey, an alternative is Benki, and I might do that soon. So enough about Bitcoin, Ether, macro talk, hedging talk, right? I'm sure that most people want me to talk about altcoins. Let's talk about that. So Trader Joe has been doing really well. It's one of the biggest beneficiaries from the Arbitrum token airdrop. And I was like, okay, like there's so much hype, let's do an experiment. So what I did was, well, like in order for Joe to really appreciate in value, it really has to take some market share away from Uniswap, right? So I was like, okay, like how's the best way to test this? Well, why not? Like, why don't I just make the same ranges for Arbitrum USDC and do a side-by-side experiment of Trader Joe, right? LPing on Trader Joe versus LPing on Uniswap. And if I make more money on Trader Joe, then that's super, super bullish, and I will like hand over fist buy these Joe tokens. And yeah, I mean, yeah, like Joe up only. It's like it's one of the few tokens that like really benefited from the Arbitrum token airdrop, because every other Arbitrum native altcoin like kind of like pumped and dumped, and I guess like they're pumping recently, but like I'm not a huge fan of those altcoins. They are shipping, right? I really like the team. I really respect the team. I talked to them quite some time. They're going to introduce revenue share with Estro, right? So maybe that can be like a narrative, right? It's like it's not a worthless governance token. You can actually be paid yield. Right now it's only available in Avalanche, but there's also like this automated liquidity strategies via auto pools. Maybe that's interesting. I'm still of the belief that I think most LPs in crypto are going to be on the more sophisticated side, and they're not going to use automated liquidity managers. But like, who knows? Like, maybe as more protocols fork UniV3, like we can kind of see like more of these protocols start to develop. Yeah, so let's talk about Liquidity Book 2.1. It's a twist on UniV3. It's not a direct fork, but it kind of works the same way. And let's talk about the experiment. So, okay, let's set the same ranges and, you know, and see like how much money I make. So Trader Joe has a 0.8 and 0.2% fee pool, and Uniswap has a 1% and a 0.3% fee pool. So I just kind of ran these simulation or experiments side by side, and I'm like, okay, like let's do this. So let's do $1.21 to $1.45 range, and I did this March 29th. So I took my Arbitrum, I single-sided deposited for this range, and if people buy Arbitrum and it enters the range, then people are going to be trading in and out of my pool, and they'll be collecting transaction fees. And I guess like the verdict is like how much money I make, like ultimately. So March 29th, I did this. On the right hand side here, you see Uniswap. Left hand side, you see Arbitrum. Sorry, Trader Joe. And yeah, initially, you can kind of add this number up. Yeah, I think this was like late March, but this was like, on the left, you can add like the deposit balance and the fee balance. So it's like $1,421 roughly. And then on Uniswap, I made $1,426 ish, right? So it seems like I make more money LPing on Uniswap V3. But like, just keep in mind, like take this with a grain of salt. It's like, this is like super tiny, right? Like, I mean, it's purely an experiment, but maybe it's insightful and interesting for you. And then a couple days later, collected more fees. Maybe you can say, hey, like I made $1,445 on Trader Joe, and then $1,455 on Uniswap. Okay, so I guess experiment one, I think Uniswap wins. Okay, you're much better off LPing on Uniswap over Trader Joe. And I guess like for an explanation of what happened is I deposited Arbitrum. Yeah, so I think the price of like Arbitrum was like $1.19, and I'm like, okay, like let me just sell into it, right, into $1.45, where, you know, if Arbitrum goes over 145, my pool will be 100% USDC plus whatever fees I earned. And you can kind of think of this as, hey, like DCA out of Arbitrum between 125 to 145 and collect any transaction fees. And then on April 3rd, after running this for like a week or so, it seems like, okay, like, you know, this first experiment favors UniV3's 1% pools over 0.8% pools for Trader Joe. Cool. But hey, like I only did it for like a week. Let's do another experiment. So on April 3rd, Arbitrum went down. So I did the same thing for $1.20 to $1.40 for these two fee pools. And you kind of see it here. And this was yesterday before Arbitrum like literally pumped like into the moon. You can kind of see that on the bank, I'm making more money on Uniswap over Trader Joe. And then this morning I took the screenshot. So, you know, because Arbitrum is like $1.50 something right now, my pool is completely USDC, right? So I DCA'd out of Arbitrum into USDC, and I collected whatever transaction fees from this pool. And hey, like UniV3 makes more money, or LPing on UniV3 makes more money than LPing on Trader Joe. Like, why is that? Because I'll talk about the Liquidity Book 2.1 design later, and I do think it actually offers significant advantages. So like, why do I make more money on UniV3? I think the simple answer, the explanation is that, you know, like if you look at the 24-hour volume, and even like I guess like the 7-day volume, it's like basically 50% of volume on decentralized exchanges goes through Uniswap. And there was like this DeFi report that was launched July 27th, where it went over like, you know, if people use aggregators, like more trades should be routed through Curve and other dexes because it's more capital efficient. However, the truth is UniV3 just gets way more trade volume, and LPs just make more and more in fees, because most crypto people, they don't use aggregators. They don't really check for the best price execution. They literally just go to uniswap.org and like click the buy and sell button. So naturally, if that's the nature of human behavior in people within crypto, then, you know, LPs should naturally be incentivized to LP on UniV3. So I think that's like the harsh truth about LPs right now and dexes. But who knows? Like maybe the trend shifts more in Trader Joe's favor with these Liquidity Book improvements. Like I said, take this with a grain of salt. Like, I am really famous. I'm really known for missing out on Joe pumps. If you remember, right back in like August of 2021. I was super early into AVAX. I bought AVAX, I bought Penguin, right, instead of Joe, and all my friends made a 10x on Joe, where I made a humble 2 to 3x on Penguin, and that was a very sad camper. So like, I'm really like bad at like making money off of Joe. I don't even own Joe right now, despite it going up, and my friends are happy. Anyways, maybe like this is an interesting experiment, but let's talk about the Liquidity book 2.1. So this is like, I think it's like an actual innovation when it comes to like, concentrated liquidity. If you know me, like I love UniV3. I think UniV3 is like one of the most beautiful like protocol designs that I've ever seen, right? Like trying to replicate a central limit order book on chain by introducing different ranges. I think that's beautiful. But the thing is, like you saw here, the Uniswap fees, they accrue separately, right? So yeah, like the fees, they're like, I guess they're separated, and you have to claim them, and it doesn't really auto compound back into the actual pool. But that's kind of what Trader Joe Liquidity Book 2.1 does. So this is like not my LP, but someone else's LP, but they LP for Joe AVAX, right? The 80 bips pool, and this was like like one night. And how it works is with V2.1, or whatever fees that gets generated within these bins, it gets auto compounded back into like wherever the trade happened. So like 24 hours later, this is like what the shape looked like, compared to this. So ideally, right, like if you think about it, like this should make for more capital efficient LPing, because as more and more trade happens within like a certain range, the fees go back into that range. Therefore, you're going to have more share of your LP within the particular. I mean, I'm not sure if like people like truly understand how concentrated liquidity works, but I do think that this is like pretty innovative. And I do like Joe. I don't own Joe, but hopefully this gives you like a good insight of like the innovations happening within DeFi, because people talk shit about DeFi all the time, right? It's like like whatever. But hey, like devs are building, right? The devs are doing something, and when the devs do something, price goes up. Whoa, right? Crazy stuff. So Liquidity Book 2.1 auto compounds fees back into the pool, which should increase the efficiency of your LP positions. And with Stake Joe, I guess V2, they're going to implement a 25% fee. So for the 0.8% fee pool, they're going to take 0.2% to SJO stakers, which might be something promising, to be honest. I guess like the argument against this is like, because Uniswap has no revenue share, right? So it's really competitive for LPs. So if Joe takes a 25% fee, then I'm like more inclined to go to Uniswap, right? If I want to be an LP. But who knows? Like, let's wait for the data, and the data will speak for itself. Like it's been up only, but in the grand scheme of things, like if they can actually compete with Uniswap, can't they be a multi-billion-dollar protocol? I think so, right? Especially if they can introduce revenue share. But hey, it's just something to consider. So let's talk about other altcoins and future narratives. I'm going to go pretty fast. I'll provide some resources in the description below. But like the altcoin markets have been doing that well, right? Bitcoin dominance going up, Ether dominance going up. On-chain markets have been pretty stagnant, maybe because of the whole USDC thing, and the lack of retail coming back. We've talked about this before, and also my YouTube metrics, I guess. Feels like there's a lot of anxiety when it comes to altcoins. Like, I mean, I feel this too, right? It's like I own altcoins. They go up in price, but it's like, oh my God, so much anxiety, right? It's like so much anxiety, right? So much PTSD. And this is like the Wall Street cheat sheet, right? Psychology of an altcoin holder, right? Like, I mean, this is like a meme, right? Like, I found this on Twitter. I thought it was kind of funny, but it's like, hey, like whether price goes up or down, you just feel anxious. So it's like, oh my God, like it goes up, it's like, oh, it has to go down, like, so much unrealized P&L. It goes down, I'm like, oh my God, like, why am I holding this shit coin? It's like, I don't even believe in this stuff. It's like I'm like, right? So, yeah, I mean, I feel like people only feel this if they like buy altcoins that they don't really believe in. So I generally, suggest people to like buy things that they believe in. So like it goes up and down, like you don't care, right? You just like ride it into the next bull market. But you kind of see this behavior across all the markets. For example, Butterfly, which I'll talk about, they released their white paper, right? It pumped like 20%, and then people sold onto it, right? This general sell the news mindset across the markets. But like I mentioned in the screenshot earlier, like LSDs have been doing really well. So let's talk about this sector. I've shared this chart before. This is the Lido ETH ratio, and Lido tends to pump really hard against ETH and then slowly enters a distribution phase, maybe because of all the VCs and the seed investors. I'm not like a huge believer of this ratio. It's just something to be aware of. Lido is up a lot on the day, including Rocket Pool FXS. So it's just something to be aware of. And I guess like the mindset is, okay, like I think LSDs, like LSD finance, surely will be a good sector, right? A good narrative. But is it better to allocate into the newer projects or like the older guard, which is like, Lido, etc. For example, there's DINERO, right? With the redacted cartel, the butterfly token. They recently released this white paper or this light paper that introduced this new decentralized stablecoin backed by Ethereum block space. And like I said, TLDR is that it's going to be over-collateralized stablecoin backed by Ether and PXE, which is like the staked version of ETH, and then it's going to come after Shanghai. So they don't have to incentivize that much liquidity. And then DINERO, which is a stablecoin, they can build out liquidity on Curve using a bunch of CDX that they have in their treasury. So they can kind of copy like the Frax ETH playbook, right? Because Frax literally used the CVX in their treasury to bootstrap the growth of their Frax ETH. And then Redacted is going to create a public and permissionless RPC called the Redacted Relayer, which is going to allow users to use DINERO for gas and for MEV resistant transactions. Lots of fluff, the product isn't out yet, so maybe you can argue that, hey, like, just buy into the things that's already live. But maybe this is something that could get interesting. It's a pretty low market cap, I guess. I'm not going to read through this, but, I've been trying to build out an intern team, right? And, they help me research things. And yeah, feel free to pause this for like the bull and like the bear case and like the supply dynamics. But hey, maybe it's interesting, right? Maybe it's a good play on the decentralized stablecoin narrative, the LSD narrative, ZK Sync narrative, bear chain narrative, low market. Yeah, you get the whole gist. There's another thing called like UnshETH, like USH. This I've known about this. I just never bought into it because I was like, what's the point of this? I don't really think this needs to exist. They're trying to build out this index of LSDs where UnshETH, right, is like this basket of LSDs, and they're trying to decentralize the validator stack, because right now Lido has the majority of the market share. Like, that's not fully decentralized. Let's create this basket. Let's incentivize things like RETH and FraxETH so that less capital flows into staked ETH, which I get, but is there really demand to buy into stuff like this? Maybe I have no idea. But price is going up only, and maybe it's like these newer projects that's building on top of the existing protocols that will benefit the most over things like Lido. But holding Lido, holding FXS, RPL, just do it. It's a good sector. If you buy it now, it's probably gonna be at higher prices 12 months from now. So just something to consider. But just looking for a newer project because maybe if you think about the percent growth, of course, if you're starting from zero, the percent growth is going to be much higher, much faster than whatever Lido is at now. The next altcoins that's been doing well is Pendle and Flashstake, and it kind of goes around trading yield. And by the way, I don't own any of these tokens like Butterfly. I do not own UnshETH. I do not own Pendle Flashstake. I do not own. I'm just making these videos just so that you are aware of what's happening. And then Pendle, right? TVL is up only. Flashstake, TVL up only. It's only 3 million. But Pendle has been one of the bigger beneficiaries from the LSD narrative. And not gonna lie, I remember back in 2021, I played some poker session at a casino. I was driving back, listening to a podcast, listening to a Pendle podcast, and I was what the hell is this? This I legit thought that this was gonna go to zero. But hey, they kept building, they survived, they found product market fit, and ultimately, this token is up 10x from the bottom. But isn't this the type of stuff that you want to find in a bear market, right? It's the teams that got dumped on for 2 years, they kept building, and then prices are up after finding product market fit, right? It's if this project is going to be around in 2 years, I'm sure that price will be up here, right? So it's hard to buy into things that's already pumped a lot, but sometimes that's maybe the best thing you can do, because there's a reason things are pumping, because people are using it. In Pendle and Flashstake, they create a marketplace for yield tokens, allowing people to get a yield up front and to speculate on the price of yield tokens. For example, you can lock up 100 staked ETH and get 5 ETH today. It depends on what the market is pricing it in at, but it's the basic idea. And their main growth driver on Arbitrum is the GOP market. So if GOP, the implied rate is 25%, you can lock up 100k GOP, get 25k today. And if you think about DeFi and if you believe DeFi is going to hit $1 trillion in TVL at a decade from now, then surely this type of yield trading product has to be has to have like some usage and product market fit, right? So from that sense, I think it's pretty cool, pretty promising. They have this VE Pendle model. They have like this new thing. I mean, they're not associated with the team, but like, they're trying to accumulate these VE Pendle tokens. Maybe that's interesting. I will say that, no, the TVL has been going up, but some of it has been incentivized, right? And I feel like right now, like the DeFi market is incentivizing protocols with like higher TVL, even if the TVL isn't really that sustainable. But like, I mean, I guess like from a fundamental perspective, like that's how tokens should be valued maybe. But there's like some reservations, I guess. And like the yield here, right? Like, you have to lock up a VE Pendle to get like the max yield. You're going to get like most likely get like the lower yield, and most of it is paid on Pendle token. So, I guess like, there's like some concerns about sustainability. But like, if you think about like any project out there with less than $100 million market cap, like they're not going to have everything figured out, right? Because if they have everything figured out, they're going to be like a multi-billion-dollar protocol. And I guess our goal is to find these things, trying to find product market fit. And yes, like the model might not be perfect, the adoption might not be perfect, metrics might not be perfect, UI, UX, yada, yada, yada. But I guess we're more investing into the future of DeFi, NFTs, crypto. And yeah, I think it's really promising, to be honest. I guess the concerns is like, it's mainly driven by emissions. Like, I understand how it works, but it's still pretty hard to use the platform. I got onto a phone call with the team for both Pendle and Flashstake. They explained it to me, but I still have a hard time grasping how it actually works, and like how do you actually use it for like, I guess like for profit-driven motives and whatnot. But I guess like as LSDs gain more adoption, naturally there's going to be more and more demand to, I guess, get their yield up front. So maybe instead of buying Lido, maybe these are the types of protocols, right? These tangential projects within LSDs that's going to benefit the most. So let's talk about Arbitrum ZK Sync. Like I mentioned, like Arbitrum tokens saw the news, right? It's like whatever. There's not that many like L2 native projects that excite me fundamentals wise. And I think if you look at the Arbitrum token, look at this, right? If you kind of look at this Arbitrum token ecosystem, it's like most of them kind of aren't doing that well. The fundamentals aren't that exciting to me, if I were to be completely honest. I do expect Arbitrum alt season part 2 once Arbitrum grants go live and they incentivize certain protocols and whatnot. But until then, the altcoins on Arbitrum, ZK Sync, it's just trading off of hype, and it's like very PvP. And from my experience, I think the most of the positive price action has been seen in these cross-chain applications that deploy on layer 2s with already like decent product market fit. So when it comes to like newer projects launching on Arbitrum, like most of them are cash grabs, right? It's like these devs like just fork something, introduce a token, say they're like the premier DEX on Arbitrum, and then it goes to like a $10 million market cap, and then it goes to zero. So I think there's like a better risk reward in buying into projects that's been around for like, let's say a few years, that's actually like deploying like projects on these layer 2s and has actual users. So full disclosure, I don't know why it's not showing this, but actually, yeah, hold up. That was a poor screenshot. I own this token. To be honest, I'm not a huge believer in this token. So I'm gonna, when I said selling May and go away, right? It's like I'm probably gonna sell this in May and go away. So I don't want to hype it up too much, I guess. But I do want to talk about Gamma because I do think it's interesting. I do think it has potential. And they're a UniV3 automator. I think I have it here. So yeah, you can kind of see here. So with the Uniswap V3 license expiring, we're kind of seeing all these V3 forks come up. And like most retail participants don't know how to LP, so they might want to outsource that into something like Gamma, which will create these strategies for you. And you can deposit it. So this is quick swap on Polygon. You can deposit USDC Ether, USDC Ether, and then earn 34% in swap fees and also the quick swap token emissions. So I think it's kind of interesting. The only reason I want to talk about this is more for like the comedic reason. So I thought the license expiry is going to lead to more forks. That's going to implement a liquidity manager like Gamma. I don't really have a longer term thesis because like UniB3 is king. I love UniB3. And Trader Joe is also cool. And Trader Joe is not going to implement Gamma, right? They're going to create their own thing. But it's one of the things I've been talking about, right? And you kind of see like this, this theme across this video. It's like, these teams that's been around for quite some time now, that's like, actually getting adoption. And I didn't know this at the time, but if you go to my channel and you look up Visor, right? You see this video like a year ago, and it's so funny because basically the Gamma team, let me move my camera. The Gamma team, they're the same team as Visor basically, and they have like new devs and whatnot. And I made this video back when UniB3 first came out, and okay, it's so funny. So basically like they've been around for like, what is this, like, when did I April? Oh yeah, so literally 2 years ago. And sometimes I like to look back on these videos and I'm like, yeah, like these videos are so bad, but I guess people watch them. And yeah, so I just want to play this video because I just thought it was so funny. Let me make sure. Yeah, okay.
What is up, guys? Taiki here with less hair, and in this video I'll be going over why I traded my Visor tokens for Alchemist tokens. If you like the content, please like and subscribe.
I just thought it was so funny. It's like what type of content was I making here? Right? It's like because like back when UniB3 came out, I was like, oh yeah, like these automated liquidity managers, like so good, right? So good. And like I have more hair here, right? And I have less hair now, so like maybe that's like a bearish whatever. Basically, right? It's like some of these projects that's been around for quite some time, I legit thought they were going to go zero, but they're around, like they're literally around. And I think it's better to side with those types of projects, right? Like devs that's been building for like multiple years, instead of like aping into new tokens with like anonymous devs. I think in a bear market or in like this type of market environment, the people left on chain, they're like more smarter, they have higher standards for things to buy. So like I said, like I'm gonna sell this in May or before May and go away. But I do think it's interesting. I do think it's interesting. The TVL is picking up. They're gonna have more partnerships. Maybe that's interesting. Yeah, and Pendle Flashstake, right? They're also on Arbitrum, right? They're not like a pure Arbitrum token, but they benefited from Arbitrum. And same for Gamma Swap, and same for Gamma. And then there's this other thing called Unidex, and this token is like up only. It's pretty crazy. I've known about this as well. I like never bought into this because I didn't think the product was that good, but I guess the market doesn't really care. But also it's like a small market cap, so it's like whatever, right? This Unidex is a meta aggregator for DeFi AMMs and perps, so they're trying to be not only like a spot AMM aggregator, but also like a perps exchange aggregator. So you can go to Unidex and then you can like lever long ETH 10x, and then Unidex will find like the best price execution for you. And then maybe 80% of your trades will be routed through GMX, 10% will be routed through Quenta, 10% through I don't know, like some other DEX somewhere. And that way you can kind of get like the best yield or the best rates, and then Unidex can take some cut. These are my intro notes. Hopefully you can see this, but it's pretty interesting because I believe, they sold a token. The team sold their tokens in November 2020 for like 20K, and they've been shipping like since then. And they have this interesting model where I believe, I don't have it on here, but basically like the team doesn't really have like an allocation, and the only way the team makes money is through like the fees. So I think 15 to 20% of the fees goes to the team, and like that's literally like their working capital. Of course, the team like in their personal wallets probably bought their own token at some point, right? If they really believed in what they're building, so they probably have their own tokens. But there's like no direct exposure that the team has to the token, or they didn't give themselves tokens basically for free. So that's kind of cool. They're already live on ZK Sync, so maybe this can be viewed as like the GMX of ZK Sync. And they're also trying to build out their own app chain built on the Optimism stack. This app chain thesis, right? It's been hyped and whatnot. There's like very few chains or very few applications that's actually done it. But maybe you can argue that, hey, like this is like a pretty low valuation. Maybe you can buy into this. Maybe a year from now, once the ZK Sync token is live, maybe it's going to be worth like $500 million or something, right? Like, ultimately you kind of have to have a longer term time horizon when it comes to altcoins. I'm not in this game of like flipping altcoins. And I will say like, sometimes like sometimes like, I think it helps sometimes to like just buy a little bit of altcoins, like micro caps, mid caps, small caps, just to get into this mindset. Because it's, if you have bear market PTSD like me, it's really hard for me to like just one day be like, oh yeah, alt season, time to buy like 5 altcoins, right? It's impossible to go from 0 to 100 real quick. So what I've started to do is like, I'm like starting to buy some altcoins, right? So like Gamma, it's like, you know, like shorter term, but it's like, okay, like whatever. And then I buy these micro caps, and then whenever I buy these micro caps, like they all go down like 40%, 50%. And I really get pissed at myself. It's like I allocate like 1% of my portfolio in these micro caps, it goes down 50%. And I'm like, did I really, you know, get rid of like 0.5% of my portfolio because I wanted to punt this micro cap? I'm so angry at myself. But also, right, you kind of have to get in this mindset of being comfortable with the risk, and get into this mindset of, okay, like low cap, bad project, whatever, I'll buy. Yeah, I'm not going to talk about these micro caps, but you know, maybe it helps to like just slowly think about altcoins, because at some point retail will come back, right? They just have to, or at least in my opinion. So I mean, going back to Unidex, on ZK Sync, right? They have a live product, TVL 1.5 million. You can deposit into the USDC vault to earn 34%. There's a 3-day lockup, I think, and there's like a 0.6% fee. So it's not the best product. The UI is like not that great, but hey, they actually have a product. And what was I gonna say? Yeah, so it's really similar to like Gains, right? So I think they use an Oracle. To be honest, like you're better off trading on GNS, to be honest, but who knows? Like maybe it's like a good ZK Sync play. Yeah, so you know, most Arbitrum ZK Sync only projects, just not a huge fan of, right? Just on average, very low quality. I think the higher quality lies within these teams that's been around for, let's say, over a year, that's been building behind the scenes. People wrote them off as dead projects, like myself, but then I come back a year later, 2 years later, and I'm like, wow, like they kept building, right? Like this is what happens when devs build. Like wow, like very surprised. So yeah, I think right now like the market is rewarding TVL, even if it's not like organic, or even if it's like partly incentivized, and the market is also rewarding projects that are multi-chain that's proved themselves to not be rugs. I think that's kind of like the trend that I'm noticing, which I think is reasonable. And I think that's kind of healthy. And ultimately, right? It's like I talked about. Yeah, so that's the last slide. But you know, we often think about okay, like are we in a bear market rally, etc. But you know, I think this type of chart pattern is very healthy. I mean, you can argue that hey, like you know, maybe you know this little pump is like what we're seeing here, and we're gonna dump again. But like you know, why are you watching my video like in this market, right? Like hopefully because you like crypto, you like DeFi, you want to you want to keep in touch with all the devs, like developers, builders, whatever, fundamentals, and ultimately I think you know this type of chart is like what's really promising. It's like yeah, things that went to zero basically and then recovered, and you know most of the tokens are already out. All the non-believers have sold, and you know we had a washout of old token holders, and now you know only like the strong survive, right? It's like you have to have conviction in crypto. It's like I'm not in this game to like trade 10% gains. I'm in here to like hold coins for many months, deal with the volatility, get laughed at when it goes down, celebrate when it goes up. But I guess like that's kind of the game we play. So 53 minutes in, I don't know what else to talk about. I guess Bitcoin up. I mean, everything's up. Really good, really cool. I guess the May seasonality is something that gives me pause. But hey, you know, ETHBTC, like I remain a bull. And you know, if you want to reduce volatility in your portfolio, really consider LP tokens. I think they're really good. You know, it's, trust me, like once you ape into LP tokens, it's hard to go back, right? It's like, you know, it's like, where's it? Yeah, it's like, you know, like I mentioned, right? It's like, you know, like, yeah, like yeah, it's like, you know, like I said, like some men get off on porn, I get off on like 20-30% yields on crypto, right? I mean, like, you know, it's the humble farmer way, I guess. I guess in terms of altcoins, right? Like, I guess like hedging, right? I might hedge against AVAX. To be honest, like, you know, like I keep saying this for AVAX. I kind of feel bad, but I guess like, we're talking about like financial markets, right? So you can have to separate like your like emotions and like token price. But you know, the concept is, hey, I'm going to continue to hold on to my high conviction altcoins. I'll probably like buy more altcoins, to be honest, in the coming weeks and months. And then if I want to protect my downside, instead of selling my altcoins, like why not like short a token that I'm not really bullish on. So yeah, it's good, right? You just scroll down, like most things are up, most things are green. I guess if you, and like ultimately, like I think we're all confused at this point. And I want to share it. I forgot where this was. Was it this one? No, it's not this one. Yeah, so this is, I shared this chart before in my last video, and I'll wrap up the video here. This is the market cap. So total 3 is this total 3? Total 3 is the total market cap excluding Bitcoin and Ether. So it's mostly stablecoins and altcoins and stablecoins. And what I did here in this equation is I took total 3 and I subtracted the market cap of USDC and Tether. So it still includes DAI and other stablecoins, but mostly, right? They're mostly out. And then I divided that by the market cap of Ethereum, and you can kind of see that the trend for altcoins against Ether is mostly down. Of course, the altcoins that do really well, right? They're going to give like 10, 20, 30x gains, but most of them just like get kind of wrecked against ETH. So it's just something to be aware of, and that I think that's why like generally in a recovery year, like most people like flock to Bitcoin, flock to Ether for safety, and then once people start to feel comfortable, then they diversify more into altcoins, into DeFi, into NFTs, and hopefully, right? Hopefully, we start to see this trend shift away from Bitcoin dominance, away from Ether dominance, back to altcoin euphoria. But that's a man can dream. A man can dream. So thank you guys for watching. See you guys later. Link to the premium Discord is in the description below. And as the markets heat up, maybe I can be more spicy and talk about 2 altcoins. 2 videos a month or something, right? So look out for that. Thank you and bye bye.